Hello, this is Steve with the Free Bullion Investment Guide. Today is March 2nd, and I am doing a review and outlook video for the price of gold. We're looking at currently the 4-hour chart, and in gold's 4-hour chart, I've been showing you this very large rising expanding wedge for over 3 months. It's been since I first started drawing it around the first of the year, and it's just the price of gold has just consistently tested it, sometimes to the downside and to the upside, and lately it's just been trading pretty much in the middle of it. But either way, it confirmed it on Wednesday, Thursday, and Friday of this week to the downside, which was expected. It confirmed it. The rising expanding wedge is a negative pattern. So the reason for gold's movement was mostly moved sideways in the beginning of the week. We had Chairman Powell's testimony in front of Congress, which quite literally helped the price of the dollar fall, but it didn't do much for gold. It just moved sideways. And we also heard that the GDP report was going to likely be less than stellar, which ended up to be false. Instead, on Wednesday and Thursday and Friday, several reasons are behind the fall in gold's price. First, we had a better than expected GDP report. Then we also heard that the trade deal is basically a done deal. But, we don't know until it happens, but that's what the news was saying. We also did have the 10-year Treasury yield rise Wednesday, Thursday, and Friday consistently, which also put pressure on the price of gold. And traders sold it all the way down to the 1290 level, which helped to create a new support level for gold. 1290 and 1280 is an older support level, but 1290 clearly stood to test and was able to hold out while more buyers came back into the market to bring it up a little bit. Now, many people also thought that the $1,300 level was going to withstand the fall, but the price of gold did stop around the 1305 level, but 1300 did not hold out for it. Now, as far as the outlook goes for the price of gold, the MACD and the RSI look clearly like the price of gold is oversold. So I do expect a bounce in the price of gold. I don't think that's fortune telling. I think that's just obvious by looking at the MACD and the RSI. Also, the falling expanding wedge, to keep it where it's at, it's a little bit too broad. It doesn't hold a lot of weight. So I'm going to bring it down to connect with this high up here to this high right here to bring this the upper trend line to have more weight for the falling expanding wedge. Now, the rising expanding wedge is confirmed, and I will remove it in the next video. For the sake of time, I'm just going to leave it for now. Now, also for the outlook for the price of gold, we also have the non-farm payroll reports coming out on March 8th. Now, I really can't interpret how the market's going to interpret a good report to a bad report. It really matters what's in it, and we'll have to see when that happens. But I have no doubt that gold will be affected one way or another by the outcome of the report. So for the week ahead, it looks like some kind of bounce will happen in the price of gold. Now, how high it will come? Will it test the 1305 level again? And it will have to break the 1305 level this week for it to break the falling expanding wedge. We'll have to see what happens. So until next weekend, I thank you for your time. I hope you have a great day, great week. Take care, and God bless.